Hi everyone. So, yes, today we are revising preparation of financial statement from our incomplete records. Okay. Before proceeding, please subscribe to our channel as we are coming up with all the revision classes, all the revision videos. All the units revision videos we are coming up with that. So, please subscribe and keep so that you will get our notifications. And for the regular classes, the details are there in the description box. You can go and check it there. Okay. Now we are going to discuss about preparation of financial statement from our incomplete records. So let us assume there is one guy, Mr. J. He is into the business of selling fruits and flowers. Okay, fruits and flowers. Basically, he don't know how to do the accounting. Let us assume he is from a science background, or let us assume he is from some other background where he do not know what is debit, what is credit. He don't know what to debit, what to credit. He can keep the accountant, no sir. He is only earning so much, and out of that how he can keep the accountant. So when it comes to the small traders and all, when it comes to the small proprietors, what they will do is they cannot keep the books. They cannot keep the employees to maintain the books. One thing. Second thing, at the same point of time, if they don't know the double entry system, they can't maintain the books at a double entry system. You might have seen in your location all the small vendors and all. Okay, fine. Now as they can't keep that, that doesn't mean that they are not going to keep any records. That doesn't mean that they are not going to keep any records. They are going to keep certain records. For example, amount paid, for what and all it's paid. Amount received, for what and all we received, from whom we received. If you put your own cash into the business, he might put, today I had put 10,000 rupees cash into the business, right? If he purchases some fruits and flowers, he might write from whom he purchased, whether paid to him or not, from whom he received, whether he paid to him or not. Like that. Okay. Sales, if he makes certain sales in a year, sales in a day, he might write at the end of the day, so much I sold, or per sale he might keep on recording, sale to A, so much I sold, B, so much I sold, C, so much I sold. So these are the major things where he will maintain. 1. 2. Along with this, if he do any banking transaction, although he doesn't record, his banker will record on behalf of him. I repeat, for the bank transaction, his banker will record on behalf of him. In the bank statement. What is bank statement? Bank statement is a statement given by a bank reflecting your account balance along with the transaction, certain transaction. Right? Okay. You might have learnt about it in BRS. Now, with all this given information, whatever the information is available, he might ask us, Mr. J might ask us to prepare a financial statement. So we should help him in preparing the financial statement as per the separate, single entry. We have to convert that single entry books into the double entry. So we should help him in preparation of the financial statement as per the double entry system, because without double entry system we can't prepare our financial statements. Okay sir, fine. What I mean by single entry, I told no, only so much will be maintained, certain items. Logically we are not maintaining debit and credit. When the cash is paid to Mr. A, for example, Mr. J paid cash to Mr. A, what will be the entry? Cash account debit to Mr. A, right? Here what happens is, we are not going to record Mr. A to cash paid or received. I told paid, right? Okay, Mr. A to cash, we are not recording that way. What we are recording, he is just writing down, I paid cash today so much to Mr. A. Using that details, we have to draw up certain ledgers, and with that ledger balances we have to draw up our financial statements. Okay. So there are two recognized approaches. There are two approaches, okay, to prepare a financial statement from a incomplete records. If I say single entry, it will be wrong, because It is not only the single entry, we can just say as records are incomplete. Records are incomplete. Okay. Full information is not there. We have to search for the information from the information which those people have given. Okay. So, two approaches are there. One is balance sheet approach, which is also called as a net worth approach, which is also called as a comparison approach. The second one is conversion approach. Okay. In the first approach, what we will do, sir? In the first approach, we are going to prepare a statement of affairs and we are going to find out how much is the difference between the capital. I will explain that. Second approach, what we are going to do, all the ledgers what they have given, we are trying to convert it into a double entry system. The details which are there in the which are incomplete, we are trying to make them into a double entry. That is conversion approach. Okay. Now, in the balance sheet approach, what we will do is simple logic I will tell how to find out the net profit. We know the opening capital. If we know the opening capital, if we know how much drawings we made, if we know how much additional capital we introduced, we can easily find out the net profit or net loss using a closing capital. I repeat, see how our capital account looks. We will be having certain opening capital. Yes sir, opening capital will be there. For that, we might add an additional capital introduced during the year. For that, from that, we might reduce the drawings during the year, because that will go out of a capital, no? For that, we might add a net profit for the period. For that, from that, we will reduce the net loss for the period. We will arrive at what? We will arrive at a closing capital. We will arrive at a closing capital. So now what we will do is, once we will prepare a opening balance sheet kind of statement, which is called a statement of affairs. Statement of affairs is nothing but a draft balance sheet, you can say. Okay, without adjustment of certain items. I will tell which are there. So, opening capital, how we will ascertain? We will ascertain by making opening statement of affairs. Opening statement of affairs. Okay, so we will find out our opening capital. With the closing details of assets and liabilities, we are going to prepare a closing statement of affairs. With that, we are going to ascertain the closing capital. Okay, opening statement of affairs, opening capital, closing statement of affairs, closing capital. The difference between the closing capital minus opening capital should be due to all these reasons, no? Should be due to all these reasons. So we will reverse the items which we have done, reverse the transaction or reverse the effects which we have given by arriving at this, at the time of arriving at this closing capital. So how we do? Except these two, okay, because that is what we are arriving at, because that's what we are finding out, net profit and net loss. So what we will do? For this, we have added additional capital to negate that effect, to take out that effect. Now we will reduce the additional capital. Also, we have reduced the drawings. To take out that effect, we are going to add back the drawings. So what we will get now? We will get a net profit or net loss. We will get a net profit or net loss. Okay. Fine. After this, we might adjust certain items. Which are they? How to know whether it's already adjusted or not? All those things I will tell. So first one is statement of affairs. It is a statement which will take consideration into all. It will take all assets and liability into consideration to find out the opening capital as well as a closing capital. Statement of profit or loss is the statement which I have done now. This is the statement of profit or loss. The statement which gives the net profit or net loss after adjusting the things. Final statement of affairs is nothing but after adjustment of all the things. If anything is not adjusted yet, if we prepare some kind of draft of balance sheet, that is called as final statement of affairs. So what are the steps, sir? Step 1, we should prepare a statement of affairs at the beginning of the period and at the end of the period to determine the opening capital as well as closing capital. Step 2, using that opening capital and closing capital, what we should do is, we should prepare a statement of profit or loss to determine the net profit or net loss after adjusting a unadjusted amount. Okay, unadjusted amount. See here, this is how the statement of P&L will look like. Capital they have given, that is closing capital less opening capital. Okay, we will add back the drawings if any. We will reduce the further capital introduced to arrive at a only profit or loss, and we will adjust some unadjusted amounts like adjustment like bad debt, depreciation, etc. Also interest on partners capital if any, if it's a partnership business, partner salary, etc. So we will arrive at a divisible profit. With that we can prepare a final statement. Now the question comes, sir, how to determine whether it is already adjusted or not? It is already adjusted or not. Listen very carefully. Usually statement of affairs, in statement of affairs, how we arrive at a capital? Simple, assets minus liabilities, right? We'll arrive at a capital using assets which should be reduced by liabilities, and the difference should be the capital. Okay sir, we arrived at it. Don't you think there is something called bank and cash in the assets? Yes sir, bank and cash are there in the assets. So always remember one thing, if anything got adjusted to the bank and cash, then it is already adjusted. If any expenses or incomes which is already got adjusted to the bank and cash, I mean which should get affected to the bank and cash. For example, let us assume there is something called interest on partners capital. Okay, interest on partners capital. Now if the question says, boss, there is a interest to be paid to the partners capital and it is paid, then which means it is already adjusted into the bank and cash. If it is already adjusted into the bank and cash, when we do asset minus liability, capital will come after adjustment of the same. So again that there is no need to adjust it, because as it's already a adjusted item. But only if they say business should pay the partners interest of so much which is not yet paid, then of course it will come here. Bad debt is what? Bad debt is a non-cash expenditure, no? Bad debt is a non-cash expenditure. But the thing is, you have to look at balance sheet whether your debtors is arriving. I mean whether your debtors are there in the balance sheet. If the debtors are there, you have to find out whether the effect of a bad debt is already given in the debtors or not. If it is already given, then your asset is after adjustment. If asset is after adjustment, capital is also after adjustment. So basically we have to check whether your assets or liabilities getting adjusted with those items already. If they are already getting adjusted, then capital is after adjustments. So additional again adjustment is not required. Only the item like depreciation, because depreciation won't get affected only. Usually when they give the details of their asset, I told no, the vendor who sells flowers and fruits, if he is having some shelf or something like that, right, to keep his items, now, or a refrigerator might be, he will not care about depreciation and all. He do not know that concept, depreciation after, you know that after 10 years I have to change, but he do not know that I have to match the expenditure of a depreciation to the current year revenue, so that whole amount of a asset will not be a burden. All those things he won't think of. Okay, so usually depreciation will be unadjusted only in the separate, incomplete records. So that you have to adjust separately after arriving at a net profit using a opening and closing balance of capitals. Okay, so always keep in mind, in a given question you have to ascertain whether the same thing, that is whether your net profit or net loss or whether your capital is after adjustment of the particular item or not. How to find out that? You have to check the asset and liability which you are comparing to find out the capital is after adjustment of those items or not. Okay. And of course, the only kind of difficulty in this particular unit is that case depends from question to question, right? Case depends from question to question. The method differs from question to question, but the beauty of this chapter is very interesting. Second one is conversion approach. In conversion approach, what we will do, sir? In conversion approach, with the given data, we will try to write the ledgers. With the given data, we try to write the ledgers. Usually, this is the method which is applied. Okay. So, fine. So, I will tell certain items now, like what are the major items. Basically, when the question is given on a incomplete records and they are asking you to find out the, net profit or net loss, then you can go for that first method. Okay, you can go for the first method, balance sheet method. Whereas they are asking you to prepare a trading account and P&L account, there only profit or loss will not do your work. You want to find out the expenses, you want to find out the incomes. With that you have to find out the net profit. So for that you need a ledgers, right? Because your financial statements are prepared using a balance ledger balances, right? So your balance sheet is also going to be prepared using the ledger balances. So you have to prepare the ledgers, which means conversion method. So listen very carefully. When they ask you to prepare a trading P&L and a balance sheet, usually what are the accounts you should prepare as a working note? One is your cash account. Second one is your bank account. You can do it as a 2-column also, not a problem. Third one is your debtors account. Fourth one is your creditors account. These are the major account you have to create, you have to prepare in any question, because your whole question will be depending upon these 4 ledgers. Okay, sir. Now, why we have to prepare these ledgers? Listen carefully. Generally, I am generally talking, like depending upon the questions we solved so far. Cash account, when they give you a opening balance, and when they give you a closing balance, usually the difference will be there though in cash account. Difference, if any, if it's a debit difference, then credit side is more than a debit, then the debit side usually it will be a cash sales. Okay, usually it will be the cash sale. If it's a credit, then usually it will be a cash purchases. Okay, so using the cash account, many a times in many a questions we can find out a cash sale or a cash purchases depending upon the balances, depending upon which side we are getting a balance. Okay, fine, sir. I am telling again, in this chapter you have to go through the question very carefully. You read the question twice, not a problem, but you should be knowing to analyze it. What is the missing figure and how to find out the missing figure? So cash sale and cash purchase, how to find out the missing figure? Using this cash account. If question particularly says, boss, there is no cash purchase, or boss, there is no cash sale, every sale is happening in a credit or every sale is happening on a credit basis, every purchase is happening on a credit basis, then there is no question of cash sale or a cash purchase. Okay. Next is bank. Usually the balance in the bank will be a receipt from debtors or payment to creditors. Receipt from debtors or payment to creditors. Usually this will be the items which we are going to find out using a bank account. Again, it's not general. I mean, generally I am speaking, it's not like only these things you are going to find out using a bank account. No, it depends from question to question. Okay. Next one is debtor. Debtor, you know. Debtors, what we are going to find out using a debtor? We are going to find out a credit sales using a debtor. We are going to find the credit sales using a debtor. At the same point of time, creditors, using their account, we are going to find out a credit purchases. Using their account, we are going to find out a credit purchases. Sometimes they will give opening balance of debtor or a creditor and they don't give a closing balance. At that time, you can't find out a credit sale or a credit purchase because two items are missing now. You don't know how much is purchase, also you don't know how much is your closing balance of creditor. Then how to do that? That time they will give certain other information. For example, cost of goods sold they might give, or how much is remaining they might give, how much is what they will do is they will give opening stock. I mean, this is one kind of method in which they can give a hint. They will give opening stock, they will help you in finding out the purchases. Okay, they will give a closing stock. Usually closing stock can be valued very easily. No, if I am a vendor of flowers and a fruit, I don't know on that particular day how much is left with me, right? So basically that also they will give. Using that you have to find out the sales, that is using the cost of goods sold method. You know, right? Sales is equal to cost of goods sold plus gross profit. What is cost of goods sold, sir? Opening stock plus purchases plus direct expenses if any relating to trade, of course, minus closing stock. So these are the items. Later, of course, from question to question it might differ. So if you ask me to take you through the illustrations which you have solved so far, which is there in the CMA material. In the first illustration, that is illustration number 23, they asked us to prepare a statement of profit or loss, right? So what we have done, we know the liability list, we know the asset list, asset minus liability. Asset minus liability we have done. We got the closing capital, we got the opening capital, which means we got the difference. For that difference, we have adjusted the drawings, we have adjusted the additional capital introduced, we got a net profit for the period. Okay. In the illustration number 2, they were asking about, boss, so much is shown by Mr. Kannan to the income tax department, whether the income showed by him is correct or not. Again what we did, same, using the first approach, balance sheet approach, we found out how much is a opening capital, how much is a closing capital. The difference is either net profit or a net loss, I mean after adjustment of a drawings and all for sure. So we found out and his contention was correct. He was showing a wrong figure as a profit. Next one, we did a Shashi's account. They asked us to find out how much is the profit. We used the first method, statement of affairs method, and we have computed it, right? And depreciation wasn't adjusted, that's why we adjusted it. After that, later interest and all wasn't adjusted. Whatever wasn't adjusted, we adjusted. After finding the net profit using a normal method, we adjusted how much with unadjusted items. Later we arrived at net profit to be added to the capital. From here onwards, from the illustration 26 onwards, we started with the other method. They have given the receipt and payment account. So with that, along with the other items like a balance sheet items and all, using that we found out how much is the opening capital. Using the receipt and payment account, we found out what are the different kind of expenses. Like see here, they haven't given a purchases, right? But they have given a, they haven't given a, first if we take, they haven't given how much is a sales, but they have given a sundry debtors opening balance, sundry debtors closing balance. Also they have given how much is received from a debtors. Using that we found out credit sales, right? So give me a oh sorry, recording was off. Yeah. So in this question, in this particular chapter, here in this question they have given sales data using, sales data, hint of a sales, and they are asking us to use the previous year sales data. They have given a gross profit, which means we can find out a sales, right? Out of that sales, 20% will go to cash, 80% will go to credit. Out of that we can find out a debtors and creditors also, the balances. So in the next one, they were again telling about a gross profit or something. Using that we can find out a sales. If we find out a sales and if we know the gross profit percentage, we can find out the cost of goods sold. If you know the cost of goods sold and if you know the opening stock and closing stock, you can find out the purchases, right? Opening stock plus purchases minus closing stock will give you a cost of goods sold. Of course, if any direct expense are there, that you should consider. Okay. These are the certain questions, and as I already told you, this particular chapter, it is not, you can't generally say it so much how you can find out a sales or purchase, but usually that is how you are going to find out a sales or purchase, using a debtor account or creditor account, or using a sales and purchases you can find out a debtor or credit balances. So read the question carefully, analyze the question. You have to extract the maximum data from the available least data which is available in the question. So analysis of question is very important in this particular chapter. Hope you got a bit idea about this chapter if you are watching for the first time or I helped you in revising this particular chapter if you have already done it. Okay, thank you.